fashionable. Fog scent. New fashion wear for men.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Markets look to snap a 6-day losing streak. The Nifty trades around the 10,200 mark. Bharti Infratel is the top gainer on the index. The PSU Banking Index is the top sectoral gainer, snapping a 2-day decline. The index had lost close to 6.5% in the last 2 trading sessions. The BSE Telecom Index snaps a 5-day decline after the cabinet follow allows more time for the telecom operators to pay for spectrum bought in auctions. And the TDP pulls out of the NDA government. Both union ministers of the party have submitted their resignation.
Well, today is a different day of trade, and thankfully so. I think we needed one like this after the last few days, wherein every time the market has started off high, we end in the low. As of now, it's not a done deal as yet, still an hour and a half left. And remember, the markets have tended to worsen in the second half in the last couple of days. But in today's session, we are off the lows of the day. Let's see if we hold on to these levels or slightly higher levels than these or no. Remains to be seen. We certainly hope that that happens. The lows of the day were in and around this 10 a.m. mark, 10:15, when we dipped into the red. From there, we've come off quite a bit. Bring up the heat map and then bring up the market breadth. 2 things that I want to focus on. One is the heat map. And remember, midway through trade, the red had started enveloping the green in a big way. For now, it's even Stevens. Yes, the commodity names getting punctured again today. Yes Bank is probably an outlier. It's not that the rest of the banking space has seen deep catches. In fact, the Nifty Bank is up about 0.5%. And there are enough and more banking names, including ICICI Bank and SBI, which are trading with a fair bit of green. Reliance Industries, after a few days of a cut, has also bounced back again today. So some bit of bounce back for a clutch of stocks that had gone down, and banks are not looking all that weak, which is a good sign. I just want to bring up the market breadth once before we talk about the liquid universe with Navneet. And the advanced decline ratio should come up on your screen. As you can see, it's still in favor of the declines, but from a yawning gap that we had when we nudged being in the red, I think the declines have come off a bit, and now the ratio a lot more respectable than what it was somewhere at the start of the day. One only hopes that this improves further. The mid caps and the small caps have not recovered as much as the large caps have, but at least we have a bit of green. As you can see on your screen, the mid caps and the small caps haven't really recovered. How is the liquid universe looking, Navneet?
Well, Neeraj, it remains to be seen whether this is just a temporary bounce back that we've seen for the benchmarks, considering the broader market indices have not picked up in today's trading session. We did have a gap up opening that got sold into. Then from those lower levels, there was some buying which came back. If you look at the F&O universe on the Nifty futures, there's not much of addition actually that has been seen in terms of open interest. Last when I checked, it was just about flattish. The plate will just come up on your screen, giving you a better indication as to how the Nifty open interest currently is panning out. It's only 1% higher. And remember, we were in the trading with a premium, but that as Nifty futures have gone into discounts. Just a word of caution, in the last hour and a half of trade, probably there could be some bit of pullback. Reason also being we can expect more volatility. Today's the day for the Bank Nifty weekly options to expire as well. But in terms of Nifty option strikes, the 10,600 call strike, which had added nearly 15 lakh shares in yesterday's trade, has seen a bit of unwinding. So almost 16 lakh shares have been shed also in today's trading session. If you look at the maximum OI concentration now, it has shifted to 10,600 call to 10,500 put, and 10,500 call has seen maximum OI addition as we speak. The 10,000 put strike once again has seen a lot of put writing in today's trading session. So the 10,200 mark remains pretty crucial for this market. Let's see if we can scale above that mark. But one important thing, we've been defending the 200-day moving average. When when we had a gap up opening, that there was some bit of selling which came from the top, but we defended the 200-day moving average on the bottom. For Bank Nifty weekly options expiry, do watch out for the range of 24,200 to about 24,400 in today's session. Well, in terms of stock futures, Amara Raja, a stock which has actually been an underperformer if you have to see in last 1 year, it's not given you any sort of returns, has seen some bit of strength coming back. The stock's up nearly 3%. It snapped the 4-day fall in today's session, and there has been some fresh long build-up that has come in today's session for March futures of Amara Raja, 17% higher in terms of open interest. The entire sugar pack has been reeling under pressure. Today is the third straight day when the sugar stocks are down. So Balrampur Chini, which is in the F&O space, has seen sharper cuts. In fact, that's one of your top F&O loser for the day. The stock's down for the 5th straight session. It's touched its fresh 52-week low, and also some bit of short positions have been seen for this counter. If you look at the March futures, I guess the open interest was up somewhere about 7 to 8%.
Yeah, and the Adani Group stocks continue to grind lower. Adani Enterprises, Adani Transmission and Adani Power, all three have seen savage cuts again in the session. I think the last 3 days, the quantum of destruction that we've seen in these stocks is fairly enormous. But it's a market like that. Let's try and find out how do pure play equity investors, how do some of the noted pure play equity investors approach this market. Gautam Sinha, Senior Vice President at Motilal Oswal Asset Management, joins us right now on the show. Gautam, good having you. Thanks so much for joining in. I know in equity markets, one should have a really long-term view, and that gives you the best returns or the best bang for your buck. But do periods like these tend to disturb the apple cart in a meaningful way? The last 2.5 odd months, or at least the last 2.5 odd weeks, we're seeing almost every rise being sold into. A lot of people are talking about how there are lower levels up ahead. What are you doing with the kind of money that is coming into your funds? Because you guys are pure play equity players.
You know, after a while, we are very happy. Long-term investors always love a sale season, and this is a pure sale season. Not only at the index level, but at individual stocks too, you're seeing some serious discounts coming in. So it's a very good time to have your buying list ready and keep monitoring the market, keep looking out for opportunities. Market is giving us opportunity to buy at good prices, I would say. And be long-term investors. Don't buy for the next 1 month, because then you could be seriously hurt. But have the appetite to hold on for 3 years, and in select stocks at the right levels, do come in. This is a good time to start coming back into markets, right? Because previous quarter valuations had become quite expensive. Now I think even at the Nifty level, we might be +1 standard deviation above the long-term mean, which is fine, and which essentially means that in individual stocks you get good opportunities. You have to be selective still. It's not a kind of market where you buy anything and you're going to make money over the next 2-3 years. That's not the case yet, obviously. It's still an expensive market, but it is not obnoxiously expensive like it was a couple of months back. And this is a market which is giving you opportunities to buy. So I'm very happy about it.
Since you're looking to buy at these levels, Gautam, I'm sure you're not going to share the stock names, but which are the sectors, or let's say the investment themes, that you guys are targeting at these lower levels?
Incrementally, I think what happened at PNB and everything, retail financials, retail private banks, given how strong those franchises are, how well run they are compared to competition, which is PSU banks, which is almost like 3/4 of the system of the credit market, right? And these guys are 1/4 of the credit market. If 1/4 of the credit market, the player is so much more efficient than the 3/4 guy, I mean, that market share shift will be accelerated only going forward. And not only that, it will also be aided by technology, right? Which will have enormously positive impact on the operating costs, operating leverage of the retail financial banks. So this is a space that you know that our portfolios are hugely bullish on. This also plays into penetration of consumption theme in India, financed consumption or loan-based consumption. That is an ongoing theme. So that space looks exciting. Oil marketing looks cheap. Really cheap, less than 10 PE cheap. So that's another area that we continue to like. Even the gas plays have corrected, so they're looking quite good. These are long-term structural stories which are not going to fade out anytime soon. So I'd continue to invest in these spaces. I think contra call would be IT and pharma. If you look at 9 months earnings, this year earnings, IT pharma has been the biggest negative surprise, or not a surprise, negatives on index earnings and Nifty 100 earnings. So I think going forward, there's a good chance that in select IT stocks and select pharma stocks, the earnings trajectory will improve from here. And mind you, these are very high quality franchises, were extremely moated. They were suffering because of some reasons which had been playing on the stocks for a while. I think the worst is over for these sectors, and could be a good time to start relooking, but selectively, stock specific. You cannot be very stock agnostic in these sectors, because some of the things have changed very fundamentally. Some of the sector dynamics have changed very fundamentally, but these are good sectors to look at now.
Okay, interesting. Wanted to talk about a couple of things, Gautam, with you. Since you mentioned banks, I mean, there is a clear dichotomy. And I wonder if this means that money will stop coming to the space by and large, because almost everybody that we speak to does not want to touch PSU banks with a barge pole. Corporate-facing banks are better valued right now, but still not, there is not enough clarity for people to go out and put money to work. And the retail-facing banks, which are probably the safest of the lot, are arguably trading at valuations which are very expensive. So if somebody wants to put money to work in the banking space, what does he or she do? I mean, if you get money right now in droves, and if you want to put this money to work, what do you do?
Yeah, it's a very easy answer, Neeraj. Go for the third bucket. The retail-facing banks had become extremely expensive. They remain expensive, but there has been a bit of time correction, 6 months. And time correction in companies which are compounding at 30% is a very good thing, because 6 months hence they are not very expensive, because there has been a 15% kind of valuation correction which has happened automatically. So I think from a competitive advantage perspective, competitive advantage of these banks vis-a-vis the extant PSU bank competition is only increasing. That is definitely true, and incremental credit market share gains will be enormous. There are operating leverage benefits because of technology-driven OPEX cost reduction, and also the liability franchises have become very strong, which reflects in the CASA of some of these banks. So clearly, these are from a earnings growth perspective, these will be some of the best earnings growth names in India over the next decade. And from valuation perspective, yes, when the market clearly sees a very long trajectory of a very strong earnings growth, it somewhere reflects in valuation. You have to live with that, but still you'll make good money from a long-term perspective in this space. The red herring, of course, are the private, traditionally corporate-oriented banks, which are also, by the way, trying to increase their retail presence now, which have focused on retail much more in the last 5 years, but they have big problems on the corporate exposure that they have historically had. I think these names are also slow turnarounds, right? They will take time, but some of them might really give decent returns, given that valuations are also cheap there. PSU banks have their set of problems, so PSU banks would essentially continue to be trading names where if you get the valuation seriously right, you get a good bang for the buck over the next 6 months or the next year. But that's the way to look at PSU banks right now. The structural problems are getting sorted, but that takes a lot of time. That's a very slow process given the extent of the problems that they have. On the NPA side, now with the recent development, you're also worried on some of the operational risk that is there, but I'm sure that things will turn around for PSU banks too, but it will take time, and there's no point in being in a hurry to catch that trade.
Gautam, the big question is actually when will the things turn? The street was turning positive after the recapitalization news, but post the PNB fraud case, we've seen a huge correction for all these PSU banking stock. And you did mention they can be a valuation bet because most of them are trading at a cheaper valuation. But keeping all that in mind, even the earnings have not been so good of these PSU banks, especially State Bank of India in Q3 disappointed the street. Would you still go ahead and take a bet only because the valuations are cheap?
Seriously, I own because my style of investing is very oriented towards long-term earnings compounders. So that aspect is still not visible here. But if someone had to look at PSU banks today as trading bets, that would largely be a valuation call. And sometimes you do find very, very attractive underpriced assets at such times, especially when there is so much of negativity, so much of scare around the entire set of PSU banks. So if you have that attitude towards money making, sure, go ahead and find a few names. Maybe not today, but maybe over the coming quarter or so. But that obviously is not reflective of what I will do, because that's not clearly my style. But from a valuation perspective, there is now some attraction in this space.
The other piece, and by the way, the charts that we are going to use, viewers, are only an example. We're not going to be talking to Gautam Sinha about Page Industries, to be honest. But Gautam, I'm using that as an example just to bring out, how people should approach companies which over the years have shown tremendous growth. Now the revenue growth may start coming off a bit because the size has gone up. Maybe return ratios might still stay stable, but the revenue growth might come off a bit. Maybe the dividend yields, obviously because of the higher price, will come off a bit. Whether all of these factors lead to a bit of a destruction in the kind of multiples that some of these companies enjoy, because hitherto there was never a question mark about an X P multiple for an X motorbike company or a specialty garment company or a retail company. With time, with 10, 15, 20 years, do these multiples tend to come off a bit?
So, if you look at, let's say, the example of Indian IT services, the last half of the 90s decade, 1990s decade, was the period of hypergrowth for Indian IT services. And the P multiples were also reflective of that kind of hypergrowth. And ever since the peak growth would have been achieved in early 2000s, the P ratios over a period of time gradually came off. And this is just an example which comes to my mind of the curve, but across sectors, what happens is essentially, new concept, underpenetrated story, underpenetrated product, underpenetrated business idea comes in, and people overestimate. People are not able to fathom the opportunity size, the extent of growth, the longevity of growth, and valuations at that period can be humongous. This is the exploding growth period of the company, where even triple-digit P ratios are possible, and that sustains for a period. Eventually, market wakes up to the fact that there are limits of growth in every business, and that's when the P contraction game starts. So even in that period, that's a very dangerous period, because even while growth is good, the P is contracting, so could nullify each other. So that happens in product category, business after business. So one has to be very mindful of owning such stocks. Whenever you own a stock with a very high PE, you have to be able to justify that PE, irrespective of the quality of the business, irrespective of the fact that growth is going to be stupendous. But how stupendous is the growth is the key question there. Is it good enough to compensate for the PE that is trading at? That's a very difficult question. That's almost like a fine art, because you're talking about future growth, right? So, and a 5% plus minus growth rate in the future can make a huge difference to the current fair value of that stock. So that's a question for investors to continuously debate on, people who are holding such stocks. But the general idea is absolutely right, Neeraj, that as the hypergrowth period gets over and the company or the business goes back down to normative growth rates, P ratios have to compress. That has to happen.
So beware of such themes as and when they do come out, because as Gautam Sinha rightly says, that could be a very painful period. I'm glad we had this conversation, Gautam. Really appreciate you taking the time out and speaking with us today on Bloomberg Quint. Thanks for that. Well, that's Gautam Sinha from Motilal Oswal AMC. Well, speaking of hypergrowth, there is hypergrowth in sugar production for sure, and that's led to a big fall in the sugar prices ever since ISMA raised that sugar output estimate for 2017-18 to 29.5 million tons versus an earlier estimate of 25 million tons. Also expects to export 4 million tons of raw sugar in the year as well. So discuss this in further detail. Director General at ISMA, Abinash Verma, joins us on the phone line. Abinash, good having you. Thanks so much for joining in. You know, we were also having a conversation earlier in the day with M. Manikam of Sakti Sugars as well. And he seemed to think that if these MSPs are where they are, then farmers will produce more sugarcane, and therefore this issue of a higher production will not go away. Mills will produce more, and we might have a glut in the sugars, in the country, unless this production goes down. What is ISMA's thought in general?
Yeah, I think I totally agree with you. He could have said anything better. First of all, it's called FRP in case of sugarcane, not MSP, because they fix a price called the fair and remunerative price. Now, if you compare this FRP with two things, I'll compare and let you know. Number one, we have heard the finance minister saying that he will ensure that the farmers get about 50% more in comparison to what is called is the cost of production, that is A2 plus FL cost. He said that in the parliament also. Now, if I look at the A2 plus FL cost in the current season that CACP had arrived at, the current season, and then compare it with the FRP that the government has fixed at 255 rupees at 9.5% sugar recovery, I clearly see almost 75% escalation over and above this cost of production of A2 plus FL. So clearly we are about 25% higher than what Mr. Arun Jaitley has kind of committed that he wants to give to the farmer. So in case of sugarcane, they're already getting higher. Secondly, if you compare the remuneration or the returns that farmers get from, say, 4 or 5 crops, for example, wheat, paddy, cotton, oilseeds, or soybeans, then you will see that the return that a farmer gets from sugarcane is almost about 50 to 60% higher than any competing crop. And therefore, what Mr. Manikam is saying and what ISMA has always been saying, that since the government is fixing the price for sugarcane at such a high level as compared to any other crop, that the farmer is getting 50 to 60% higher, he will always be attracted towards sugarcane. Thirdly, there are 3 or 4 reasons that we need to understand. Number one, as compared to any other crop in the country, there is an assured buyer for sugarcane. The sugar mill is assigned an area, and therefore we have to buy each and every stick of sugarcane, even if we are making losses. So he has an assured buyer. He doesn't have to hunt for the buyer. Sugarcane is a very sturdy crop, little bit of less rain, still it survives, but other crops may not survive. Thirdly, here is a price that the farmer is assured to get. I mean, nothing less than that. But in other crops, he may not get that price, something middleman takes, or the government just says that MSP and then he has to sell in the mandi. There is no guarantee there. So all these reasons point towards a very, very remunerative, lucrative crop as compared to any other crop in the country. Sugarcane is the most lucrative. That is why in the last 7 years, we have seen surplus sugar production over domestic requirement, except for last season, which fell because of weather concerns. So if there is no weather concern, everything is normal. We expect that the country will continue to have surplus sugarcane, surplus sugar, and therefore tremendous problem for the industry.
Okay. Mr. Verma, just for clarification, I want to know, because I remember interacting with one of the management, Gujarat Ambuja Exports. They said higher MSP, actually, it doesn't impact companies because the government will be compensating for that extra cost. In your case, I know it's called FRP. Who is bearing the burden? Is it the mill owners or the government?
Oh, 100% the mill owner. There is not 1 rupee also given by the government for sugarcane.
So each and every penny which has been increased, everything will be paid by the mill owner, nothing by the government?
Nothing by the government, and that is why that small distinction in the
one second, are the rules different for different crops then?
That is what I was going to explain to you. In case of, say, let us take, for example, paddy and wheat. whatever MSP that the government announces, that is why it's called a minimum support price, the government is mandated, or the government has an obligation to pick up each and every kilo of paddy or wheat which the farmer offers to the government or its agencies like FCI or state agency. But in case of sugarcane, it is not MSP, it is not a support price. It is called fair and remunerative price, which is a burden only on the sugar mills. And therefore, if I'm unable to pay the FRP to the farmers, the government doesn't compensate me with any direct subsidy or direct amount that the farmer gets. They do help us with concessional loans, or they do help us with subsidies on exports, but nothing directly on sugar cane.
There's been a huge correction, Mr. Verma, in all the sugar stocks in the last 3 sessions at least. Have you spoken to these companies? Are they looking to speak to the government? Because I guess now they are selling sugar which is below their cost of production as well. Pardon me, above their cost of production.
See, the sugar prices started falling from the beginning of November. And we raised the red flag before the government that looks at the sugar prices are falling. And we are looking at a very big crop in the next sugar season starting from October 2018. But we were not expecting a big crop in this season because we were expecting a very balanced demand-supply position. But suddenly we see the yields from Maharashtra and Karnataka, yields per hectare of sugarcane, much higher than anybody was expecting, and probably the highest in the history of the country. So the farmers are benefiting. Therefore, suddenly we are seeing that there is surplus sugar in the country, which we need to dispose of, and that is putting a burden on the domestic prices. The domestic prices have fallen, and the last 3 or 4 sessions you are seeing a major correction downwards or a fall in the sugar stock prices or share prices. That's mainly because the market now understands, or the investors now understand, that there is surplus sugar in the country, which is going to block some important cash flows or some vital cash flows or funds of the sugar companies. And also that since the cost of sugar cane is probably it is the highest in the world. I mean, we pay almost about 60 to 70% higher sugar cane price as compared to, say, a country like Brazil or Australia. So therefore, the market also understands that it's not going to be easy for us to dispose of this surplus sugar in the international market. So all these combined, the surplus sugar and the challenge to export sugar or dispose of the surplus, is putting a burden on the domestic prices as well as the chances on exports. So we have requested the government to take some steps. They have taken some steps, but as per our understanding, those are not enough. And therefore, the problem is real as far as the sugar inventory is concerned. Unless and until we export sugar, something like 2 million tons in the current season before the next season starts, and another 4 million tons in the next sugar season.
Abinash, one final thought, and maybe you referred to it in part, but is this the extent to which the damage to prices is possible? I mean, there has been a severe price correction. It is also a demand-supply factor that comes into play aside of what's the cost of production, etc. Would 30 rupees or thereabouts be about the low that the sugar prices could fall to, or is there an outside chance that there could be further cuts?
See, there are 2 issues why. I mean, sugar prices work on sentiments and market sentiments on expectations what's going to happen. Number one, the sudden fall in the current sugar prices is because of a huge surprise in the last about a month or so, that Maharashtra and Karnataka would be giving us 50% more than what we were expecting. So that's an extra which is coming into the market, which is actually dampening the sugar prices. Second is from June or July onwards, we will start looking at the next year's expected production. Currently, we are looking at next year's crop going to be higher than the current year's crop. How big is the question? And that is sometime in July we will get an understanding. So if next year's crop will look much bigger than the current one, then obviously there will be a lot of pressure on the industry, the sugar prices and the farmers. But if the next year's crop is not as big as the market is expecting, or the rainfall is not as normal as one is expecting, then the prices may not fall further. Thirdly, we are looking to dispose of the surplus, which will give us some cash flows, and we are looking at the government to support us that they have done in the past, and therefore I'll not be surprised if something comes up in the next 20 days or 15 days by the government to dispose of the surplus into the global market. So if an announcement comes in the next 20 days that each and every sugar mill is given a quota to export, which we have done in the past, then I believe that the sugar prices will get arrested at the current level. But if there is no announcement on the exports, I fear that there might be a further fall.
Mr. Verma, what sort of announcement will you be watching out from the government in order to dispose the additional inventory via exports?
See, in 2015-16, this government, sometime in April, had announced a 40 lakh ton of export program called the MIEQ, Minimum Indicative Export Quota. And that 40 lakh tons was distributed amongst each and every sugar mill in the country. And they were asked to export that quantity. And the government said that all the benefits that the government gives to the sugar industry or to the sugarcane farmers will be linked to the fulfillment of this quota. So therefore, immediately in 6 months' time, 50% of that quota was exported into the international market. And then the government stopped the program because there was a fear that there is not enough sugar to kind of export in the global market. So if a similar program is brought in by the government in the next 20 or 15 days, giving an individual quota to each and every sugar mill in the country, that will help the industry tremendously. Secondly, in 2015-16, that was the only time that the government gave a small production subsidy directly to the farmers as a part of the FRP of sugarcane. It was a very small amount out of, I think, 230 rupees per quintal of sugarcane. The government gave 4 rupee 50 paisa per quintal of sugarcane, amounting to something like 400 crore for the whole country. So if that kind of production subsidy can be given towards paying the FRP to the direct, it can be given directly into the bank accounts of the farmers, which was done last time. So these two steps can hugely save the sugar industry today.
Okay, Abinash, we'll leave it at that. Thanks so much for taking the time out and being with us. All the very best.
All the best. Thanks a lot.
That's Abinash Verma, Director General of ISMA. Sugar companies having a great day. Jai Bala, Chief Market Technician at Cash the Chaos, joins us right now on the show, as does Sumeet Bagadia. He'll be joining us in moments from now, and then we'll have G. Chokkalingam. Jai, good having you. Good afternoon, good afternoon to you out there in Singapore as well. Thanks for joining in. There's a big spurt, Jai, in the markets in the last few minutes of trade. Today could well turn out to be the first day in many where we start off and end at a level which is higher than the opening price, because otherwise we've been now getting used to the template of the markets getting sold off after the initial hurrah. What are your thoughts on how the near-term trade could look like?
Yeah, fair point. That's been the template for the last few weeks, and there's an important thing that's happening in the markets. Last time when we were discussing the Nifty, we said we wanted the market to go somewhere close to 10,170. The market did 10,160, and we had a hedge of about on the 10,200 put, and that has actually tripled. And so that being the case, the market has done the minimum possible leg of this down move, and it does look a bit ambivalent whether what the market is going to do. We want the global picture to improve a bit. We want the Dow to take out the February highs and the S&P to take out the February highs, and we want the crude oil to take out the 68 highs it made in February. If these are in place, at least one of them is in place, we can be sure that the bottom is in at 10,170 and the markets are heading for 11,400. But as of now, while the medium picture doesn't change, there is still a possibility that we could have some more downside. But that decision is to be taken when the markets come somewhere close to 10,330 on the Nifty. If the market were to struggle around the 10,330, 10,350 mark, I think it will be an indication that one more leg of down leg is pending. But if the markets were to sail through those levels, then there's a good possibility that the bottom is in, and we will be bullish on the markets. Additionally, as I said earlier, we need to see the global macros also improve. Either crude has to go above 68, or we want to see the US markets take out the February highs.
Hi Jay, good afternoon. Navneet here. Well, we've defended the 200-day moving average on Nifty, but not for Bank Nifty, so to say. But still, if you look at the individual stocks in this market, especially from the ID pack, which have done well, I'm coming to your trading strategies, and I can see a buy call on Oracle Financial. Could you take us through that?
Yeah, that's right. You know, two weeks ago, I was bullish on IT. I said we are spoiled for picks within the IT space, and you know, we had even projected the IT sector using the CNX IT as a proxy. We had projected a level of about 14,000 for the CNX IT index, and you know, that being the case, you know, coming to this specific particular setup on Oracle financials, you know, we have a bullish candle reversal on Oracle financials, and the move from 3,400 to the recent high has been it's on a very trending move, and we got a very sensible correction at the recent lows. So you know, I think the couple of days of low is going to hold, and there's a good possibility that Oracle financials will also participate in this leg of the move, and it's bound to take out the highs around 4,400. So you know, this is a play on the IT sector, and once again a bullish setup, pretty similar to what we spoke about on Tech Mahindra and HCL Tech, which have been holding pretty well in this down leg of the market.
And you too have a call on Interglobe Aviation.
Yeah, that's true. You know, if you look at this chart, you know, if you're able to pull up the chart on your screen, you know, it just briefly went past the 52-week high at about 1350 odds, and then it's got a strong price rejection from there. At current levels of about 1275, 1280. I think this stock is pointing to be a good sell. Now, even if you look at the initial highs after the stock got listed, that was also somewhere close to around that 1350 mark. So I think it was about 1390 if my memory serves me right. I think it got a strong rejection from those levels too. So there is a double resistance for the stock at these levels, and I think, you know, given that it is selling off in some sort of price rejection in the short term, I think there's a good possibility it will get pulled towards the strong support region of about 1050. If it were to break 1050, it will become a double top, and it will be a bigger sell for the medium term. So, you know, we are trying to play the larger trend here, and in the shorter term also there's a very good price rejection. So I think this is a low risk entry point for a short sale here.
Okay, so that's the view from Bala on a clutch of names. Actually, just before I get in with Mr. G. Chokkalingam, Jay, I just want one quick thought on a group which is looking terribly weak the last 3 days. All the stocks in that group, Adani Group stocks, they've fallen and fallen very, very hard. What do the charts indicate, if anything?
Yeah, this is a name that these are the names that needs to be avoided at this point of time. You know, Adani Enterprises may still have some downsides to do, probably somewhere close to 150, 145. Once it can reach that level, I think it will see a relief rally. But the larger term, the longer term trend, I think it still seems to be intact. But let's see the quality of the bounce when it comes to those important supports. Once that is there, I think there is a good possibility that this will be a correction within the larger term, longer term uptrend, and I think one can position long based on the price action the market gives around the 145, 150 mark. So until that, this is a no-go zone.
Okay, but a bit of a bounce that we're seeing in line with the market, which is also really spurt in trade now. Sensex 370 odd points. It's very unlikely that we will now close below the opening lows, but you never know. Never say never. This is a very volatile market, but there's a bit of a bounce and a strong one at that we're seeing. If we can just pull up, before I go to Mr. Chokkalingam, the Nifty contributors and just see what's really revving up. I think Reliance should be there because it is amongst the better performers, but just those contributors list comes up on your screen. Reliance right up there, HDFC and Infosys. So the same set of stocks in the morning, just that they seem to have strengthened a bit, and the weaker hands are not as weak as they were in the morning. I think that's probably the principal reason why we are doing so well currently. Mr. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory, joins us on the show. Mr. Chokkalingam, yesterday amidst all the market turmoil, an interesting thing happened. Kotak Mahindra Bank overtook ICICI Bank as the third largest bank by market cap. Today it may have reversed a bit, but if you had, or if you got the money to invest into a private bank right now, what would you choose? Would you choose the better valued corporate facing banks like Yes, ICICI, Axis, or do you go with the HDFC, Kotak, IndusInd variety?
I would go with, among the names you have mentioned, HDFC Bank. because that is the only bank which gives you a lot of confidence at this point in time in terms of frauds happening, in terms of NPA surging from the infra segment. So among the large bank, this will be the safest bank, HDFC Bank. I am pretty confident that at least another 2-3 years, this bank can post minimum 15 to 18% profit growth quite consistently without making any negative surprise on NPAs. So therefore, this is a bank I would vote for.
Mr. Chokkalingam, anything from the PSU banking space that you'll buy?
Definitely. I am buying Indian Bank. We have been focusing largely on mid-sized to private bank, but the first time after a long gap, I have picked up the Indian Bank. Very interesting. I mean, the chairman interview I read, that gives me a lot of confidence. What I learned from this bank is that, this is the first bank in the PSU space to get involved in, fraud or scam, whatever you call, more than a decade ago. And that made them to go conservative in lending and also streamlining the process. And today, among all the listed PSU banks, over 20 banks are listed, this is on the top of the league table in terms of net NPA percentage, in terms of price to book value, and also if you combine credit growth, this becomes the best listed PSU bank, and the stock also corrected a lot. So I believe that the Indian Bank can create substantial wealth in the next 1-2 years. So we have been recommending and buying for our clients.
I just want to mark a few stocks from the broader market. Tejas Network, that one's gone up. That's seen gains of nearly 8%. And Aegis Logistics, I think from yesterday's fall, it's had a good bounce back into today's session. So that's maintained its gains throughout the session. That's trading with gains of almost 7%. And a couple of other stocks which are constituents of the Nifty 500 index. You've got stocks like Trent, which is up in trade today. Trent's up actually 5% in trade, and a bounce back has also been seen for banks like Federal Bank and even Radico Khaitan. That's also seen a good buying momentum, so to say, in today's session. Federal Bank is up 4% and Radico trading with gains of almost 4%. Mr. Chokkalingam, we've seen a huge correction for both, actually, the benchmark for the large cap world, even the mid cap world. Is there anything from the large or the mid cap that you're looking to buy at lower levels?
Any particular sector you mentioned, or
no, anything across the sectors? Any particular stocks that you're looking to buy at these lower levels?
Yeah, definitely. I mean, we are also impacted by the fall because value stocks also corrected. But I still feel very happy about the fall. We lost about 13 lakh crore of entire market cap from January 26th record high level. I'm feeling happy because now the investors' focus would come back to value investing. So therefore, I recommend good number of stocks now to accumulate. One of them is Moil Limited. Buyback started at 240. Of course, it's a very small proportion of outstanding equity they are buying back. The reason for recommending Moil is that just about a week back they increased again manganese ore prices by anywhere from 5 to 10%, and already 2-3 occasions they have increased the prices. And it's a cash-rich company. Even after the buyback, the cash will be more than 2,000 crore, which would be about 41% of the market cap. And it has got nearly 100 million tons of reserves of manganese deposits. So I firmly believe that in the next 1-2 years, this could be taken up for stake sale by the government because there is going to be a lot of pressure on the fiscal balance. So the government will be forced to opt for outright stake sale of companies like Moil. Even if that doesn't happen, it is trading at around 8-9 p.m. 1 year forward earning. And the current price is, what we saw in 2010 when the company came out with IPO of 400 rupees. Now this 200 rupees is after 1:1 bonus. So in the last 8 years, the stock has not done well. And that gives you a lot of downside protection. It doesn't assure you the return, but the return would certainly happen when the manganese ore price further firms up. And I'm pretty confident that this could be a multi-bagger in the next 1-2 years.
Okay, stay on, Mr. Chokkalingam. So much more to talk about. Let's get in Sumeet Bagadia in on the discussion as well. Sumeet, thanks so much for joining in. The indices have just moved very well in the last half an hour of trade. Are you initiating any index trades?
Hi, good afternoon. Well, I think looking at the momentum in last half an hour, it seems that it has broken the resistance of 10 to 40, 10 to 50 levels. Now, if the closing is about 10 to 40, 10 to 50 levels, then there is a possibility that we might see a pullback from present levels for the upside move of 100 to 150 points. That means on high side, there is a possibility that we might see levels of around 10 350, 10 400 levels in next 1 or 2 days. Today's closing will be important. If the closing is about 10 to 40, 10 to 50 levels, then we will see a move around 100 to 150 points in Bank Nifty. So in that case, one can initiate long positions in Bank Nifty at the current market price. If there is a dip of around 30 to 40 points, then that should be used as a buying opportunity for the upside target of 10 350, 10 400 levels, with a stop loss to be placed at 10 150 levels on lower side.
Okay, what about specific stocks?
Well, stock specific, there is one call on buy side and the other one is on sell side. The buy side call is SDFC. SDFC is looking good on charts. Looking at the chart, it seems that from here on, we will see a move around 70 to 80 points. That means on high side, there is a possibility that we might see 1840 as a target. So for a trading perspective, one can initiate long positions in SDFC at the current market price. If there is a dip of around 10 to 20 points, then that should be used as a buying opportunity, with a stop loss to be placed at 1750 on low side for the upside target of 1840, 1850 levels in next 2 to 3 days time horizon. And the second pick is on sell side, that is PFC. PFC is looking weak. In last couple of days, we have seen a sell-off in the counter. Now looking at the chart, it seems that we can see a extended fall till 87 or 85 levels. So for a trading perspective, one can initiate sell position in PFC at the current market price, with a small stop loss to be placed at 94 levels on higher side for the downside target of 87 and 85 levels in next couple of days.
Jay, State Bank of India has shown a big move today, 3% higher, ICICI Bank about 3% higher. These two banks had gotten beaten down yesterday. Is this more of a dead cat bounce, or would you play more for them?
Oh, ICICI, and which was the other one?
State Bank of India.
Oh, State Bank of India. Yeah, I think it looks more like a dead cat bounce than a trending move. So I would be a bit cautious here. The better names within the banking space are HDFC Bank. Even there, I would like to see some more correction, somewhere close to 1770, and or a Kotak Bank. Even there, I need to see some more correction similar to what I'm seeing in what I'm expecting in HDFC Bank. But these two names are a bit better. But ICICI is a tricky one, and it's got a huge sharp, but it could still do record highs, but the risks at this point are slightly elevated. So although I'm still positive on ICICI, but I would be a bit more sanguine in allocating cash within that space to ICICI.
Well, the other one which has recovered from day's low is Yes Bank. It was down 4 to 4.5% at one point of time. With market recovering, obviously, this one too has seen a bit of bounce back, though it's still one of the top losers on Nifty, sitting with cuts of almost 2%. But let's move on to the buzzing stock of the day, and that's Sunil High-Tech Engineering. Let's go across to Nikki Mirchandani to get more details on that stock. Nikki, over to you.
Thank you, Navneet. Well, the stock has risen as much as 20% odd today, which is its highest level, the most that we've seen in since October 2016. The volumes pretty much remain moderate at 5.6 times its 30-day average volumes that we've seen. Notably, the up move comes after 6 days losing streak. The stock has lost a good 14% in the last 6 trading sessions. On YTD basis, the stock has returned, has fetched a negative return of 16%, but on yearly basis, it's a positive up move of 12%. What's going on with this company? Well, the promoters of the company have hiked the stake in the company to 40.25% as compared to nearly 35.37% that we've seen previously. That is as per the December shareholding pattern. Well, the promoters have converted their warrants worth 4.87% of their equity, which explains the hike of promoter stake. Erstwhile promoter of the company have exited the company long back. It was parents of Sunil Gute which has exited the holding in December 2015. Promoter holding of this company has come down to 35.37% from 56% that we've seen in December 2015. However, the present promoters have been consolidating their holding by infusing more equity, and a report by Ventura Equity suggests that the promoter holding is expected to improve further to 48.5% on fully exercised exercising these warrants. It has initiated a report back in October 2017 where it suggested that the company has successfully executed 46,126 megawatt of power infra, which is the highest execution any infra company has shown until now. It has a shifting it has shifted its focus from power to road and infra project, which is also a positive. It also notes that the worst is now behind the company, and the hike in the promoter stake allays the fears of promoter shareholding pattern. Back to you guys.
Thanks, Nikki, for bringing all those details with regard to Sunil High-Tech Engineering. But the other stock which is doing well, and I highlighted at the start of the show, this is not done too well in last 1 year, and that's Amara Raja Batteries. I was just looking at the trends on the futures and option side. A lot of OI addition actually has been seen for this one on the futures side. Jay, I want to come to you for Amara Raja on the charts. How does it look at current levels?
Yeah, it's looking fantastic. This is my top pick within the auto ancillary space. You know, from a medium-term perspective, I have a price objective of about 1250 to 1300. So this stock will do pretty well, and you know, it's bottomed out. We had projected this stock to cross 1200 in the medium term around early December. And I think it came up to somewhere close to 890 from about 760, and it's just pulling back from those levels. This is a short-term correction. I think the stock is set to blast off in the short to medium term. Look out for this. This is going to do pretty well, and it's going to outperform its peers within the auto names.
Mr. Chokkalingam, any thoughts on the battery makers, Amara Raja, for example?
No, it's a great company, no doubt about it. So definitely one can buy long-term investor, because recently it has captured a lot of market related to even batteries used by the telecom towers. So, considering the valuation, I would suggest only the long-term investors can buy and hold at current price.
Okay. Mr. Chokkalingam, we leave it at that. Thanks so much for joining in and giving us that perspective. Always appreciate you taking the time out. Okay, as we slip into the break though, talk about a global war. Is a rebalancing of global trade relations maybe on the cards if the Trump administration imposes import tariffs, but that's not a real concern for equity markets in India in particular, according to Citi's Mohammad Apabai. Listen into a slice of the conversation that he had with us earlier in the day.
I think that the impact is potentially quite significant. It really depends on how it is introduced and how it is imposed, and also how deep it goes and what the retaliatory effects would be. All the while we have in our minds what happened in the 1930s when there was the introduction of tariffs and it turned a recession into a depression. I don't think anybody really wants to go down that route, but I think that there is not some, I wouldn't really call it protectionism, but I think some rebalancing of the trade relationship is probably what is going on. I think the really interesting question is what the other trade partners actually do, especially in terms of not so much with the steel and the aluminium, but more in terms of the sectors that would hurt the region more in technology, for example, or in manufacturing. Those would be far more significant, whether it's at the autos or mobile phones or computers or that sort of broad tariff. Now, I think the interesting thing is that Mr. Trump is executing on the things that he did warn us about on his website after he got elected. So I think that they are quite serious about many of these issues now.
The market will start pricing in what these heads of states have spoken about in the last maybe 72 hours on social media and otherwise. I mean, in answer to Trump's comments, the EU gave out a comment about what they could do, and Trump speaking about cars. So if talks were actions, then we are already in a serious trade war as we speak.
Yeah, I think that it could be a negotiating ploy. I mean, he did then pedal back what he was saying about a trade war by linking it with progress in the NAFTA talks with Canada and Mexico. So with Trump, for example, it's not so easy to know what is bluff and what is the reality. I think that's part of the game that they're probably playing to extract concessions from the negotiations that they're looking at. Now, of course, the biggest part of the deficit is actually not with China or Mexico. Is actually with not with Canada or Mexico. Is actually with China. And so far, the steel tariffs are not having an impact on that trade deficit, which the Americans want to get down. So I think what is interesting at the moment is that the equity market and other asset markets are remarkably calm about the potential impact of this. We've had a look at, for example, the names that would be impacted if there was a trade war or trade tariffs. And what we've found is that certainly those names over the past year since Trump got elected have actually outperformed, and even in this recent correction have outperformed the broader market. So certainly in the equity market at the moment, no real concern of a trade war. It is the case that steel companies and aluminium companies, particularly the Indian ones, have been negatively impacted as a result of the developments we've seen over the past few days. But in terms of the broader market, no real impact yet seen.
Yeah.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और more fashionable. Fog scent. New fashion wear for men.
Welcome back. You're still watching Countdown with us. Nifty is now trading with gains of nearly 110 points. And just to highlight, today is the day of the Bank Nifty weekly options expiry. And the rally has actually been led by the banking stocks, because if you look at the top gainers in Nifty, it is the likes of ICICI Bank, State Bank of India, and even HDFC Bank have been doing well. And all of them are your heavyweights, hence the contribution coming in on Nifty as well. But which are the Fab 4 stocks of the day? For that, let's head across to Yash Upadhyay to find out the same. Hi, Yash.
Hi Navneet. So Aegis Logistics has snapped its 6-day losing streak and it gained over 9% today after Motilal Oswal came out with a report initiating coverage on it. And now they have assigned a buy rating and have set a target price of 303 rupees, indicating an upside potential of 31% from its previous day's close. Now they believe that Aegis is to be the biggest beneficiary of the imports of LPG, and also the ramp up of its Haldia and Pipavav terminals would drive throughputs. Also in their report, they've highlighted that the company's return on equity and return on capital employed are likely to improve from the current levels to 35% and 31% respectively over FY20. HDFC Bank, the big index heavyweight, is up 2% after the company said that it would be selling 5.1% and not the over 6% stake in Computer Age Management Services to Warburg Pincus affiliate Great Terrain Investment for about 169.5 crore rupees. Bhushan Steel is up about 14.5%. The stock had gained as much as 20% today after the resolution professional of the debt-ridden company said that Tata Steel has emerged as the top bidder for the company's assets. And finally, some big moves coming in from Foods, and in this one is up 9.5%. A couple of key triggers. The company said that its board of directors will be meeting on March 13th, where they would consider the proposal of allotting convertible warrants to their promoter and also acquiring additional stake in frozen foods. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. And let's move on and talk about the chart of the day then. And IT stocks have seen a revival of sorts, with most of the large cap as well as the mid cap IT stocks seeing strong returns over the past few sessions. But one stock, however, which has not done well is Wipro. Let's head across to Jayesh Khilnani to find out more details on that. Jayesh.
Navneet, the stock that you're referring to, which has not given you gains in 2018, that is Wipro. The purple line on the chart will show you that how Wipro has performed throughout the year, and it has given you almost a 10% decline for the year itself. So investors definitely not happy with Wipro. But what has really done well is Tech Mahindra, which has given you double-digit or more than that, and you have Infosys and TCS with a near 11-12% gain for themselves, while HCL Tech has given you just about 6-6.5%. Now, the consensus target price on Wipro that's available on the Bloomberg terminal, that gives it a return potential of nearly about 3-3.5%. Just meager, but there are about 50% analysts with a sell rating on this stock. The future definitely looks extremely bleak. Now, for the quarter gone by, what happened with Wipro was that out of the 5 Nifty companies, it was one of the 2 Nifty companies where there was an EBIT margin contraction, and Wipro actually the EBIT margins contracted more than 200 basis points, and TCS and Infosys saw EBIT margin expansion, while Tech Mahindra also saw some expansion. So definitely to keep a watch out on what happens in Q4.
Okay, Jayesh, thanks a lot for bringing all those details with regard to the IT space. But joining us on the show now is Mayuresh Joshi, fund manager at Angel Broking, who's joining us now. Hi, Mayuresh. Good afternoon, and thanks a lot for joining us. Some respite seen for the markets after a fall that we've seen in the last 6 trading sessions. What's the approach at these levels? Is it just a short-term bounce back? Are you looking at any sort of bottom fishing at these levels?
So afternoon, Navneet, and a very happy Women's Day to you, to your entire team at Bloomberg Quint, and all the women investors out there. In general, for the markets, I think very difficult to call when a bottom will be made because we are in for volatile times, both domestically and globally. So what you've probably seen in terms of the yield movement is not a heartening sign. I think the markets have shaved off for those concerns. The central bank, specifically the Fed, rising rates, and again a part of the money probably moving towards dollar-backed assets. I think this is one of the trends that we're probably looking at domestically. Again, I think what probably happens with inflation is a key monitorable. But having said that, I think the corporate earnings on Q3 have been pretty stable. And if again earnings show some respite, specifically in the quarter to come, so on a quarter-on-quarter as well as a year-on-year basis, I think the markets might take some amount of relief out of that. So my own sense is that the markets might correct a tad bit more. But yes, I think in such corrections in volatile times, I think selectively chipping in 10 to 15% of your corpus on every fall in qualitative names in the large and the mid-cap space is something that I love to do.
Sumeet, you gave a short call on PFC, I guess, but REC too has been quite weak in today's session. What's the reading on the chart with regard to that? It's also one of the top F&O losers. Can one look at creating fresh shorts on REC at current levels?
Yes, absolutely right. REC and PFC both are looking weak. As far as your question on REC is concerned, it has given a one-way fall from higher levels, and now looking at the chart, it seems that the extended fall can be seen from present levels. I think on downside there is a possibility that we might see levels of around 118 in next couple of days. On higher side, it has resistance at around 132 levels. Till the time 132 levels are not taken away, it's better to avoid long positions. And those who have taken short positions, they can hold on their positions for the downside target of 120 and 118 levels. If 132 is taken away on higher side, then only we will see a pullback move till 140, 145 levels. Till the time 132 is not taken away, one can hold on the existing short positions for the targets of 120 and 118 levels.
Okay. Jeb, before we thank you, I was just looking at stocks which have zoomed up in the last few minutes of trade. A slightly illiquid stock, but which has been in the thick of actions. Phoenix Mills, do you track it?
No, I don't track that.
You don't track
I was expecting, in the Fab 4, I was expecting Yash to track Mangalam. That's doing pretty well, and it's a fantastic stock. Let's make it a Fab 5, and let's talk about it. Maybe if we have the time.
We do have the time. Actually, let's go ahead. Let's go ahead. We do have the time.
Doing pretty well. Yeah, we were. I mean, the last time I checked, it was about 11.5% or 12% up, and I think it had a stellar run in 2015. From 14 actually, it went from 6 rupees to 450 rupees, and that stock actually pulled back for the last 2 years, and it's fallen from 440 odds to somewhere about 125, and doing pretty well today. People who aren't afraid of taking risk, this could be something. There's a fantastic opportunity at this point of time. This could be a 3.5, 4 bagger from current levels. There is a small possibility that it might pull back one more time close to 130, 125. But if it were to go above 195 on a closing basis, I think it's done. I think it's very certain that it's going to go for 550 plus. I'm a very conservative trader, and if I were in this position, I would wait for a close about 190 or 195 and then go long. But it could be okay for somebody else's risk appetite. So they could go long at current levels and accumulate up to 120, 130, 125, and expect the stock to quadruple in the next 1 year.
Mangalam Cement right now, right, Jay?
The Mangalam Drugs, actually.
Are you talking about Mangalam Drugs and not Mangalam Cement?
Yeah,
okay.
That's right. Yeah.
Okay, so yeah, I think we got confused. At least I got confused. I thought you were talking about Mangalam Cement. Fair call. Before we thank you, one top closing strategy.
Yeah, I think, see, it's I'm very, as I said a few weeks ago, I'm very positive on Brent crude. I'm expecting that to reach at least 75 in the next 1.5 months to 2 months time frame. And if you pull up on your Bloomberg terminal, if you can run a comp function on Brent versus Nifty and SPX, you will see that the returns have been in tandem with the Brent performance on a 1-year basis. I think crude has returned about 17.14%, whereas Nifty has returned 15.97%. On a 2-year basis, Nifty has returned 39%, whereas Brent has returned 77%. On a 2.5-year basis, Nifty has returned 35%, whereas Brent has returned 32.8%. So given that structure, correlation, you can see why I'm bullish on Brent as well as on the Nifty. And there was an interesting article that somebody had forwarded a couple of days ago saying that lower crude prices are giving a tailwind. I don't know when it provided a tailwind, and people don't cross-check their theories with realities. So that being the case, I expect upstream companies to do well. If you run a performance check against, we had a long call on ONGC and a short call on HPCL based on this. Between November and February, when crude was doing pretty well, you can see that ONGC had outperformed HPCL by a wide margin. I expect the same to happen now from this point onwards. Reliance is also coming to very important support. So I think it's having its last leg of the up leg pending. So once it comes very close to 875, 850, I think it'll be a screaming buy for me. So it's again based on this market's correlation where upstream sector is going to do well based on higher crude prices.
Okay, we did try and put up that chart that you spoke about, Jay, as well. Thanks so much, Joe, for joining in today. We're about time with you. Thank you so much for being with us on Bloomberg Quint. It's Jay Bala. Touch of ideas, Mangalam drugs is something that he really fancies. Okay. Mayuresh, have you looked at Mangalam drugs ever?
No, unfortunately not in our coverage, Neeraj.
Mangalam cement?
Yes, Mangalam cement was, but again, I think at this juncture, as I've been time and again pointing out, I think JK Cement, Ramco and JK Lakshmi Cement are the three names that we probably like within the mid-cap universe. And the logic very quickly is very, very simple. I think for JK Cement, I think the white cement part of it and the realization outlook thereof, I think looks pretty robust. And even on the blended scale, considering white and grey cement realizations, I think there is sufficient headroom as demand starts growing generally for the industry to start inching up. Though we've seen in post-cost inflation, I think a marginal pass-through will start happening as volume growth starts picking up. Again, I think for Ramco, I think the kind of increase in their grinding capacity that they're probably doing is going to hold them in good stead. You did witness issues related to sand mining and the input cost inflation. But again, I think the grinding expansion and again the kind of realization growth along with the EBITDA per ton expectations laid out over the next 2 years holds it in good stead. For JK Lakshmi Cement, again, I think the cost optimization program, the conveyor belt that they're probably putting through the captive power plant, obviously assists and abets the EBITDA growth. And on a valuation matrix, I think it is one of the cheapest stocks on an EV to ton basis, around that $80, $81 kind of a mark. So I think three individual stories, but again, I think good prospects for all three of them over the next 2 years.
Okay. It's 3:14, so just before we get in, what dealing rooms are recommending in the session today, a quick check with Navneet on what could enter the F&O ban or come out of the F&O ban. Navneet?
Peter, just one stock, Oriental Bank of Commerce, that is likely to come out of the F&O ban. If you look at the overall open interest as a percentage of market-wide position limit yesterday was very close to coming out. So it was around 80.7, and there has been unwinding for the futures as well as a lot of the option strike of that counter.
I'm sorry,
no
but
problem.
Jamie Dimon is speaking, so I have to cut across to him.
Go ahead.
It could hurt growth, but I don't know. I'm not predicting it, but I think you should expect more. I hope it also brings people to the table to negotiate, and I hope the Americans are being very specific with the Chinese, Mexico, Canada, saying here's what we think is fair, here's what we want, and have a mature conversation and get it done. And the president and his people legitimately say, hey, we've been having some of these dialogues for 15 years and they don't work. And so this is kind of a shot out there. But again, most of the business community would have preferred set out a strategy, organize it properly, tell people what you want, negotiate it, and if you don't get it, sure, then take action.
Do you think businessmen and chief executives will hold back from investing money in the U.S. until they figure out exactly what this means?
I don't, not yet, no.
when, I mean, if it escalates, will they? The Fed is also waiting for wage growth, right? Does this hurt wage growth prospects?
Well, I don't think it's going to do anything immediately. I think it's just noise and press, and you think most Americans are going to work today worrying about this? They're not. There's 150 million people wake up every morning and go to work.
Chief executives are.
Yeah, but chief executives are going to wait and see and take a little measured approach and see what the next round is and who gets exempted. But if it continues and it gets worse, yes, it will hurt growth. It'll hurt investment, not just in the United States, maybe elsewhere. So it could offset some of the very huge positives we've had from competitive tax reform.
What does Gary Cohn resigning mean for the business community?
I think it's terrible. I think Gary is a very strong proponent of economic growth. I think he's quite bright and knowledgeable. I think he was good to have in the White House, not as the press writes to defend Wall Street. He knows how an economy runs. He knows what needs to be done to make it healthier for all Americans, and he's not there. So, it's unfortunate. And, I called him yesterday. I wish him the best. He'll be fine. But, we'll see who they put in the job next. It may be very important.
What is Gary doing next? Did he tell you?
I don't know. He did not tell me, and I'm sure he's going to have plenty of opportunities.
Who would you put in charge, or who do you think the president should put in charge? Someone, again, that was close to markets, close to Wall Street, or just a business?
I don't know. I really haven't thought about it very much. So it's hard for me to give you a list. I hope it's someone who's knowledgeable, thinks strategy, is strong. The president likes strong people. If he's not strong, I don't think it'll work very well. But hopefully he'll understand markets, global, our allies around the world. I mean, it's really important that we maintain good relations with our allies around the world.
How's business overall? It feels pretty good. What's the biggest risk out there?
You're talking global? Oh, business is doing great. The United States is.
Okay. Well, he of course spoke about this trade tariffs and spoke about how Gary Cohn's resignation is also not the best thing to have happened. And then, of course, started talking about the business. The line's slightly sketchy, but we'll try and get you the excerpts of this conversation a bit later on as well, and on our website too in moments from now. Sorry, Navneet, you were talking about one stock. We're turning from the macro to the micro. Yeah.
That's okay. He's a very important person. It was Oriental Bank of Commerce, which is likely to come out of the ban for tomorrow.
Okay, so watch out for OBC, likely to come out of the F&O ban tomorrow. Okay, take stock of what dealing rooms are recommending in the session today, and Yatin is here with his channel checks. Yatin, good afternoon.
Afternoon, Neeraj. Some cheer and some relief for the dealing rooms as we bounce back from that 200-day moving average crucial level. So finally, we have managed to bounce back, but what's not managed to bounce back is REC and PFC. And since the last 3-4 days, since there have been reports that the government is looking at the power sector and the kind of defaults and disbursements that have been made from REC and PFC, probably there is a lot of nervousness in both of these stocks, and domestic funds are still said to be sellers in both of these stocks. So watch out for this one. Dealers expect the weakness to continue. What is strong in the trade in the F&O segment is Amara Raja batteries, and 3% up for that stock. Dealers on the basis of F&O trends do recommend buy today, sell tomorrow kind of a strategy. And finally, we have Muthoot Finance. That is one stock wherein a lot of portfolio funds are said to be buyers at lower levels. The stock is holding out, despite the carnage that we have seen in the mid caps. So dealers do expect some short-term price action on the positive side as far as this stock is concerned, Neeraj.
Thanks for that. Some interesting names. Portfolio managers buying into some small names, and REC PFC is something that domestic funds seem to be selling. That is what dealing rooms are telling us. It's about time that we take in closing strategies also. So let's get Sumeet Bagadia to give his top closing strategy first. Sumeet, if you had to bet on one stock as a closing strategy, what would that be?
Asian Paints at CMP. It has taken support, and it has multiple. In fact, it has multiple support at around 1100, 1110 levels. So till the time these levels are not taken away, the counter is very strong, and from here on we can see a bounce back till 1160 levels. Once the stock is able to break 1160 on closing basis, then there is a possibility that we might see extended move till 1180, 1190 levels in the next couple of days. Purely for a day or two, one can initiate long positions in Asian Paint at CMP, with the stop loss to be placed at 1110 levels on lower side for the upside target of 1160.
Okay. Thanks for that. Watch out for Asian Paints. If you had long, or would you initiate a fresh long BTST on the index, Sumit?
Yes, absolutely. For a day or two, we can see a bounce back in index. From here on, there is a possibility that we might see a move from 100 to 150 points in Nifty. So for next 1 or 2 days, one can initiate long positions in Nifty and Bank Nifty at the current market price. In Nifty, one can maintain stop loss of around 10,150 for the upside target of 10,350, 10,400 levels.
Pull up the intraday chart of Trent. We highlighted that stock, but I guess it's risen even from those levels and currently trading at day's high. 8% higher for Trent. I don't know if it's a move which is coming for the sector, the entire sector or not. VMart is up, CESE, all these players have been trading in the green, but Trent particularly has seen substantial gains. Mayuresh, anything on Trent if you guys track?
I am positive on that stock, Navneet. And if you look at the growth trajectory, specifically in terms of the SSG growth, I think that looks to be very, very promising over the next couple of years. And what Trent has it, I think, it through the food outlets of Star Market, Star Bazaars. I think they are largely catering to that part of the audience. And again, I think the kind of revenue acceleration that one really expects seems to be pretty good. In fact, in terms of their operations out of Zara, I think that year gone by was a little bit tepid in terms of readjustments. But again, going forward, I think strong top-line growth, EBITDA margins in double digits is something that we can expect. So overall, I think the SSG growth should bounce back very, very sharply and with good volumes specifically across their value chain and the sub-segments that they operate out of. I think it's a very, very compelling story for long-term investors. So yes, I think I remain extremely positive on this story over the long term.
Okay. Mayuresh, I'm hearing this name quite a bit now the last few days. Safari Industries, I believe, is a stock that you like. What's the rationale? It's also a company that has gained quite a bit in the last few years.
Oh, it has. And again, I think if I take you through the industry dynamics, Neeraj, I think it's a 9,000 crore industry at this point of time. And again, I think the top three players, VIP Industries, Samsonite and Safari account for almost 28%. The rest of the industry is obviously unorganized, and with GST coming through, I think it's going to be a level playing field for a lot of these organized players. So I think that is one important facet that all three players will enjoy. In terms of market share gains, Samsonite has actually remained very, very stagnant around that 35% mark. VIP Industries obviously is the market leader with a 50% share. But Safari has actually gained market share around that 15% odd mark. And this is based on the premise that its sales have actually grown 6 times over the last 7 years. And with sales growing at that humongous pace, with a lot of product restructuring happening and a few acquisitions happening in terms of new products introduced, like school bags, backpacks, to the acquisition of Genius and Genie. My own sense is that the acceleration in top-line growth can very well continue. On the margin front, again, I think the margins reported in FY11-12 of 4%, and the 9-month margin FY18 at 9.1%, again, is a very, very healthy sign. So asset-light model, they've probably got all the parameters working in favor of their market share gains expected going forward. They've expanded their retail reach. The financial outlook looks very robust with a 23% top-line growth, a 60% earnings growth, and that itself should help it report better ROEs going forward. So I think all these attributes, in my opinion, make Safari Industries a very, very compelling and interesting play with a long-term perspective.
Okay, that's another funda pick of the day on Safari Industries. Counter which is not very liquid actually. If you look at BSE right now, only 1,500 or 1,600 shares have been traded. Pull up Manappuram Finance as we speak. That too has gone up in trade. Remember, all these stocks had taken a beating in the last few sessions, and some bit of bounce back has been seen from those lower levels. Manappuram Finance is the stock we're talking about. It'll just come up on your screen. Sumeet, on the charts, would you take any trade here? Or let's say if somebody had created short positions, should they be now booking their losses? Or at least if the stop loss has been hit, what would your recommendation be?
I think one should be on long side in Manappuram Finance. If anyone who has taken short positions in Manappuram Finance, then they should move out of the sell positions, because the counter has taken a support at around 200 DMA levels, and it has respected the 200. Once they stop to break 107, 108 on higher side, it's presently quoting at around 105 levels. So if 107, 108 levels are taken away on high side, then there is a possibility that we might see a good up move in the counter in which 150, 120 levels can be seen in next couple of days. So I think till that time on downside, 102, 101 levels are not taken away. One should be on buy side rather than on sell side. And on high side, if 107, 108 levels are taken away, then we will see a one-way move till 115 or 120 levels in next couple of days. For a trading perspective as well as for a medium-term perspective, one can initiate long positions in monochrome at the current market price.
Okay, so you can initiate your long positions, and Sumeet also suggests if somebody had taken a short position, they should close them now. But let's head across to Neeraj to find out how exactly the closing is panning out today. Neeraj, some respite for the markets. We finally snapped the 6-day losing streak.
Yeah, and closing above the opening levels of the day. I think this is happening after a really long time as well. So about 300 points for the Sensex, 75 for the Nifty. The Nifty Bank about 308 points. So the best performing index amongst the three. The mid cap and the small caps probably not doing as well for most part of the trading day. But let's see how they are closing, about 0.5%. So big lackluster compared to the large caps. Still not a bad performance. What's doing well? Amongst others, Reliance is there, but SBI, ICICI Bank, Reliance, I would reckon that these are amongst the heavyweights, and HDFC. So you have such stocks participating in a meaningful way, you would know that it's good for the markets. Infosys is about 1.25%, HDFC Bank about 1%, so that's not done too bad either. Select pharma names, but they don't really matter too much from an index weightage perspective. What's not done well? Sun Pharma down about 2.5%. Tata Steel has gone down about a couple of percentage points, and Yes Bank about 1.5% lower. But the losers, few and far in between. Kotak Bank yesterday overtook ICICI Bank as the third largest private bank by market cap, and now it's given way again because it's down 0.5% versus ICICI Bank up about 3.5%. So a bit of a musical chair out there. But having said that, while the large caps have done well, the mid caps not so much, but there are individual pockets which are standing out.
And I'm going to start off with Mangalam Cement. That counter did pretty well in today's session. We saw good gains coming up for that, 8% higher for Mangalam Cement, and it's going to be closing around the day's high levels. And Mangalam Drugs too, which was Jay Bala's fifth stock of the day. So that's also closing with gains of nearly 13% as we speak. Bhushan Steel was up and about right from the word go in the morning. Remember, yesterday Tata Steel informed the stock exchanges that they have been declared as the final bidder for the Bhushan Steel plant. In fact, they bid for the bid was the highest, and probably they would be getting that plant. And look at that counter towards the end. It's closed almost at day's high with gains of 17 or 18%. The other one which did well from the retail space, Trend, that's also closing around the day's high mark with gains of almost 8%. So good day for Trent as well. And Tejas Network from the broader markets was the other counter which registered strong gains in today's trade. On the flip side, the losing side, REC and PFC, both those stocks were weak right from the opening session actually, and they're also in the futures and options market. So there was some amount of shorting seen for both these stocks. They've been weak actually for the last few sessions, but REC particularly was down in trade, 7 to 8% trading lower. The other pocket which was weak for the third straight session was the sugar pack. Reason being the production this time around has been higher, almost up 45% as indicated by ISMA. The prices, sugar prices in the recent past have been falling, and that's the reason why the stocks are correcting. So stocks like Balrampur Chini and Uttam Sugar were down. One stock, PSU banking stock, which was outperforming so far, finally saw some profit booking, and I'm talking about IDBI Bank. That stock actually corrected today, and look at the intraday chart. It is a closing almost with cuts of nearly 6% in trade. IDBI Bank, remember, on YTD basis too has outperformed if you compare it to the markets or also to any other PSU banking stock, Mayuresh.
Yeah, so on close, the market's closing very well. Let's look at the turnover, and today being Thursday, you'd probably have a higher options turnover any which ways, but just wondering if, wow, that's high.
I think that should be the highest ever turnover being recorded on the F&O side, and the reason for that is the weekly options expiry day as well, Neeraj, 16.7. The rally, I think, which we saw towards the end, was contributed by majority of the banking stocks, hence the underperformance from the broader markets as well. But on the NSE cash side, the turnover was still the same. Actually, we saw 30,000 turnover in yesterday's trade as well. So I think what is important for tomorrow's trading session is that the rally that you saw for the banking stocks today, can it continue tomorrow or not? Or today's rally was only a function of the expiry day? So that remains a very critical point. Pull up the Nifty intraday chart. I think when we opened today, the high level was somewhere about 10,241, and the closing, and this is around that level, we opened, there was a gap up opening, we slipped into the red, but towards the end, this bounce back that you're seeing was contributed by stocks like State Bank of India, ICICI, even your other heavyweights, Reliance Industries, or let it be HDFC, all of them were trading in the green. They contributed the most. If you look at the contributors chart as well, Reliance features on the top. Remember, while the market was correcting, this was one stock which was actually weak. So some bounce back coming in from Reliance Industries. And rest, it is dominated by financials, ICICI Bank, HDFC and HDFC Bank. Nothing contributed or capped the gains because if you look at the contribution, TCS, Sun Pharma, Tata Steel, ITC, they were in the red, but we didn't see sharper cuts for these heavyweights in today's session. Well, on that note, let's try and get some closing thoughts going from our experts. Sumeet, I'm going to come to you. Finally, we're closing. We've defended the 200-day moving average for the second straight day. Let's say once again, if we have a gap up opening tomorrow, how would you approach the index?
Same view. I think at present, the closing what you have seen is good, and now here on there is a possibility that from for next 1 or 2 days we can see a bounce back till 350 or 400 levels, 10,350 or 10,400 levels. So for next 1 or 2 days, it's better to be on buy side. And if tomorrow we see a move around 40 to 50 points as a gap up opening, then also I think one should be on buy side for the targets of 10,350, 10,400 levels. Downside 10,150 should be the stop loss for long positions.
Okay, so for the next 2 days, Sumeet suggests to be on the buy side. And finally, Mayuresh, some closing thoughts from you. The sort of correction that one is seen in the markets, there would be some retail investors who would have turned jittery. What would your advice be to them?
No, again, I think we are in for volatile times, at least in the short interim time period. But over a longer period of time, as I said, I think a lot more positive will start playing out. Corporate earnings for one, I think, as they have been quite reasonable in Q3, if they start showing signs of imminent recovery, I think that is going to be one important aspect and facet that the market will watch out for. Again, over the next few weeks and months, I think the initial monsoon trends is something that we'll ideally look out for. And again, that is going to be extremely critical in terms of how the inflationary trajectory and the rate curve movement, specifically in the Indian context, moves. And again, on the global scale, again, what we probably seen in terms of yield movements, I think that becomes a key monitorable along with what happens in terms of rate hikes, not just by the Fed, but the other central bankers, including ECB. But I think over the next few weeks, in an interim time period, I think you should see some amount of soothing of nerves. The markets might correct a tad bit in that time period. But again, I think that becomes an opportune time for long-term investors to probably start accumulating small chunks of qualitative names within the large and mid-cap universe.
Well, ECB meeting will be in focus today. Thanks a lot, Mayuresh, as well as Sumeet, for joining us today and taking us through your thoughts on the markets. Well, on that note, we'll slip into a quick break, but don't go anywhere. We'll be back with more on the other side.
Life's so lovely, live life happily. Oh. your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're watching Countdown with us on Bloomberg Quint. Well, let's see how the European markets are trading. And I guess it's been a mixed start to the trade for the European market. All the three indices there, FTSE and CAC, are pretty much trading in the green, but some bit of loss is seen for the German index. DAX right now is trading with cuts of nearly 0.2%. Let's head across to Yuan Potts, who joins us from the London studio with more details about the trade there. Hi, Yuan.
Good morning. Yes, there's some improvement in risk appetite today here in Europe. After that positive session in Asia, European markets pushing slowly higher. Most government bonds trading lower this morning. Investors shrugging off concerns about a potential global trade war. That's after the US said that Canada and Mexico may get tariff exemptions provided they can reach a deal in those NAFTA negotiations. But we're about 2 hours and 10 minutes into the session here in Europe. And aside from Germany, down 0.2%, bit of positivity around the markets today. Most of the region trading in the green. The Swedish market up 0.7%. It's the best performer. The CAC in France, it's up 0.3%. Real estate and telecoms companies leading the advance this morning. On the FX markets, the euro trading lower and bond yields edging higher across the continent. That's as investors await the European Central Bank's latest policy decision. We'll get that at 6:15 p.m. Delhi time. And watch out for Mario Draghi's news conference. That comes 45 minutes later. Back to you.
Thanks, Yuan, for bringing those details from the European markets where ECB meeting will be in focus today. But let's move on. The first Indian microfinance lender to get an universal banking permit, Bandhan Bank, is now headed to the bourses with a price band of 370 to 375 rupees per share. The bank is looking to raise 4,473 crore rupees. Bloomberg Quint's Vishwanath Nair caught up with the managing director of the company and started by asking about the valuations of the bank. Listen in.
Valuation of the bank are independently assessed by the investment banker. I am not expert on that. I only feel that whatever the valuation will come, it will be status maintained of the bank. Whatever bank have been done is a unique banking model that should be create the value to the bank on that. Only I say that. You can talk with the investment banker. There can be details give on that.
Sure, sir. Firstly, what exactly are these funds going to be used for? And going ahead, what is your strategy as far as Bandhan Bank's growth is concerned?
First point is that we like to continue our growth. As a history, we have been, whatever we have been done. But other point is there, gradually our denominator is increasing. Percentage-wise, it's not maybe that much on that. If you see that the last 3 years average growth year on year is a 51% has come. And though this year little bit is not that much, but up to the 3 quarters, first 3 quarters, we are already in 31% credit growth. And deposit growth isn't fantastic on that, no doubt is there. So deposit growth is the 31%. The last quarter always credit, uptake will become high. So I hope that they will be like to go near to on that. So this is a very good growth I feel on that. In that sense, if we like to continue, there's large number of customer base and reaching to this, the more people in a pan-India basis. So we have needed the capital on that. Though we have that capital 24% capital adequacy ratio, but we have not need in that much capital, but we like to use this money for further capital. We are taking this initiative, there is one cause of that, the banking license, there's a condition is given our regulator. We must be come to this listing within 3 years, so that we haven't come. Second point in the how much will come, it will be decided by it was decided by the SEBI. SEBI say that the less than 10% you cannot offer any listing. So we are going on that. So these are the two big matters. But third point, I feel that is a need because of the customer base is at 12 million. Every day opening 15,000 new accounts, people depositing money to the bank. So I should be like to very openly disclose my all information to the public, and my depositor also like to happy, my borrowers will be happy, my investor also happy. So I feel that we will be like to transparently run this bank, which can be strength for the future banking growth.
All right, that's the new kid on the block. The IPO will be coming soon of Bandhan Bank. Well, moving ahead, Navneet Manot of SBI Mutual Fund believes that India will not be aloof from global turmoil just on the back of domestic inflows. And whereas Madhusudan Kela believes that the fear around PSU banks is overdone. Hear out what the market veterans had to say on the sidelines of the Pentomat Group's New India Conclave.
We really don't know the world that we are entering in. Good part is that the global economy is in a good shape. I mean, there is a synchronized global recovery, and that's actually getting stronger by the day. We'll have to wait and watch how much central banks unwind in terms of monetary policy and how much impact that has on the real economy. But India won't remain completely insulated from whatever happens outside India just because we have a lot of flows from the domestic investors. I mean, if history is any guide to go by, of course, it will reduce the magnitude of volatility that historically we would have witnessed because of some of these reasons. So let's say $1 billion selling by FII, you go back in history and see the magnitude of fall that we would have had. But today, because you have the provident funds, you have the retail investors, SIP flows, etc., they will provide some stability to the market. But I think it's going to be a tough year. Reforms never happen out of conviction, but they always happen out of compulsion. And some of these things actually lead to far deeper reforms than we could have ever imagined. Let's say, had this not, the entire NPA mess not happened, would you have had the bankruptcy code, the NCLT, the shape, the whole ecosystem, the way it's becoming? And I'm completely confident another 2 or 3 years' time, I think probably the corporate lending or the wholesale lending will be far more safer and secure and better than what the retail lending is today. Because what we had in 2008, and one of the largest private sector bank got into trouble, we had like all those CIBIL and several other things in the space of retail lending. And then retail lending completely changed. The digital technology helps. Something similar is happening on the wholesale lending side. It will be very different in next few years than what it is today.
You look at it, how much this, out of proportion this is blown. You're talking of 10-12,000 crore rupees being lost on 2 clients. This is what has come out, at least in the last 2 weeks of investigation. They have gained more money than this in 2 accounts, Bhushan Steel and Bhushan Power, than what they were anticipating. We are talking of 4 lakh crore rupees of NPL resolution in the next 3 to 4 months. 2,56,000 crore rupees of NCLT 1, and another 1,40,000 crore rupees of NCLT 2. 4 lakh crore rupees will bring down the overall gross NPL by 40%. It's a very large number. It's huge. But in spite of all that, stocks have corrected 50%, 60%, 40%. So what market is fearing, that is it 10 times larger than what has come out? Very strongly urge to the government and the ministry people, they need to come out and give confidence that we are there, and whoever are the real fraudulent people, they will be punished, but genuine business mistakes will be protected.
Well, Lakshmi Iyer of Kotak Mutual Fund is of the view that the missing commensurate supply is plaguing the mind of the bond market. And at present, in a chat with Bloomberg Quinn, she further states that small catalysts can act as fillers but aren't durable. Listen in to a slice of that conversation.
Bond markets, to my mind, are worried more about the domestic factors, which is more overwhelming right now, and lesser to do with the global factors. Right. So basically, the fact that there is a lot of impending supply, which will start from April of 2018, which is a month from today, and there is no commensurate, or at least perceived commensurate demand to really absorb that supply. I think that is plaguing the minds of the bond market trader right now, and to some extent the global factors are just kind of acting as a fringe, I would say, events or impactfulness, but it's more of the core domestic issues that we are dealing with right now.
Okay. What is your assessment of liquidity at this point in time? I understand that the RBI has also announced some interim liquidity injections through the repo auctions. Has that made a difference?
So it has made a very big difference, especially at the shorter end of the yield curve. Market was clearly showing signs of being choked of liquidity. So we actually morphed from a liquidity surplus stage to we were tending to a liquidity deficit zone. And with this, introduction of a slightly long-term repo window to the tune of about 1 lakh crore has ensured that liquidity remains, I won't say surplus, but comfortable in the system.
Two developments that we heard from Delhi. One is that the government expects a $1.5 billion interim dividend from the Reserve Bank of India, and we also heard that they're pushing for a Fitch upgrade. Right. Are these things material?
They can act as small catalysts, but as I said, the hygiene checks are absent right now. So the mood of the market is not upbeat at the current juncture. Till some time back, I would say that they were actually mirroring, it was a mirror image of equity market in terms of sentiments, but now equity also sentiments are a little bit dampened. But any which ways, that, and as I mentioned to you, the future course of inflation and supply. So I think the small catalysts can act as, I would say, small fillers to give you some moments of joy, but nothing on a slightly more durable basis, because markets are also of the view that, these things can probably give a short-term fillip, but nothing to really give you a sustained recovery in the bond yields at the current juncture.
Okay. One section of the market also believes that the yield, 10-year yield, is going to go as high as 8%, particularly mid-April when the borrowing kicks in. Would you agree with that view?
See, numbers can go anywhere. Today, the market liquidity is so deplorable. Till yesterday, the bond markets were trading just about 10 to 12,000 crores in the entire day, and which is, 1/10 or 1/15 of the equity market volumes. In very good days, euphoric moments, we had about 1 lakh crore of bonds being traded, government security. So today, if just two of us are assuming the entire market, if you decide where the yields have to be and you just short it, for example, you want the yields higher, there they are. And if I decide I'm going to start buying a few 100 crores, I can can actually put the price higher. So what's happening is that the lack of depth in the market, any of these numbers are not impossible. I would say it will take a while because there has to be value buying that has to creep in, right, ultimately. So yields at these levels are looking a roaring, screeching, screaming buy, but market participants like us, for example, mutual funds are staying off because we don't know if I buy today, for example, and as you rightly observed, April, who will I sell to?
Correct.
We don't know. So because those answers are not very certain, I think it's better to stay off the market. Try to ride those small moments or small pleasures. So these are like one of those cheat day moments, you know, in a diet regime. So you're getting to do cheat days, so you can indulge in sweets for a short while.
For a mutual fund investor who's been watching this, he's had a fairly decent 2017.
Yeah.
Most of them sat on gains. We've seen 2018 begin with extreme amount of volatility in the equity markets.
Right.
What are you telling investors? Are you telling investors to switch to debt? Guys who are in debt, what do they do?
So we're telling investors that equity is like Red Bull and debt is like proteins or vitamins on your portfolio. You need to have both of them. It's very important. If you have been excessively consuming Red Bull, your portfolio is running or galloping. It has obviously slowed down a little bit.
Sure.
You can't juxtapose one on top of the other. You can't supplement. You can't say that okay, this is going to be substituted. There is a complementing strategy. So what we are telling investors right now is that yields are at elevated levels and bond offerings, fixed income gives you all seasons kind of offering. In terms of seasons, here means interest rate cycles. So you can pick and choose the kind of strategies that you like.
Sure.
So it's good to bring a stable bias to your portfolio and fixed income will do just that for you. So you can invest in fixed maturity plans. You can invest in corporate bond based strategies because the yields are high. So you can lock into returns right now, enjoy the carry, enjoy the stability. But don't make the mistake of redeeming from equities and going into fixed income or removing from. Do that only if your asset allocation has seen a shift.
All right, those were some interesting insights into the bond market, but let's move on. Her latest movie, Lipstick Under My Burqa, received rave reviews from various quarters and was screened at international film festivals. It had run into issues with India's censor board and was only given a go-ahead after 11 cuts. Bloomberg's Harsha Subramaniam sat down with Alankrita Srivastav, the director of Lipstick Under My Burqa, and started off by asking about her views on the role of the censor board. Listen in.
I'm of the view that if we live in a democratic country and over the age of 18 one has the right to vote, one definitely needs to trust the citizens of this country to be able to make and watch, make and consume the content that they want to sort of do. Otherwise, I feel we shouldn't call ourselves a free and democratic country. And so I feel I don't believe in censorship at all. I feel there should be no censorship because the moment there's any kind of thing, oh no, the moment you put a but, I feel you're opening that can of worms for any kind of blockages to happen to content. And of course, I feel that eventually one has to, it is really incumbent upon the citizens of a country to decide to patronize a certain kind of content versus another kind of content. So I do feel that all kinds of content should be allowed. And I also feel that as free citizens, we have the complete right to protest against any kind of content that we don't like. It's just that that protest can't be violent and it can't, it can't go into vandalism and threats of death and things like that. But I feel freedom of expression also means the right to protest. So it's not only about the right to make. One can... So which is what I feel, for instance, with Padmavat. It's not that they didn't have a right to protest, but it's like, what is your form of protest? You're holding a candlelight vigil or are you setting fire to the theatre, so that's the difference.
Okay, to the point about women and sexuality that you just alluded to, why is it that we've not seen films being made, particularly in Bollywood, I don't mean mainstream Bollywood, that either, there are very few films where either women are depicted as protagonists or the narrative is from the woman's point of view?
Just to dig a little deeper into that, there are 2-3 interconnected things. First of all, it's very important to understand that the realm of filmmaking has completely been controlled by men across the world, not just in India. And women have had very little say in terms of what content is being created and how films are made, how shots are taken, what are the stories being told. So I feel there's no running away from that very basic fact. So because of that, the predominant gaze in cinema is male, which means not only is the point of view of the filmmaker male, it's also how characters within the frame look at the woman. That's also from like a male point of view. Also then the audience is encouraged to engage with cinema totally from a male point of view. So even women actually have been trained to watch cinema like men. So you will consume everything without questioning, without any kind of critical thought. So this male gaze, of course, has most crucial reason for it is that there have not been enough women telling stories and not enough women behind the camera. So I think the most important reason for this is the lack of women directors and women filmmakers. You know, that's the reason I feel that there are not so many stories being told about women. And even now, like, there are many stories being told about women, many more stories being told about women. So you do have films with female protagonists, but very often you will find that the eye that looks at them is not necessarily female. So the perspective and the point of view still remains male, even if the protagonist is female. So though that's one, like, a step forward, but it's not necessarily the same thing. So I really do feel that many more, when we actually have a situation where 50% of women behind the, 50% of people behind the camera are female, like 50% of filmmakers are female, I feel content will change very, very dramatically, and ways of seeing will sort of change. And that is not to say that all women necessarily have to have a female point of view, or no men can be sensitive to the female gaze. But overall, the vibe of everything will really, really change. That's what I feel. So I feel that's the main reason.
Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. Don't go anywhere. Coming up next is What Did You Miss?
आइसक्रीम खाएगी?
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद।